Welcome to our deep dive on surviving the 1099 world as a contractor or side hustler. First, we will demystify the $400 rule, quarterly estimated taxes, and safe harbor protections. Then, we will walk through a practical step-by-step fix and share deduction strategies to lower what you owe. Finally, we will test your knowledge with a quick quiz and wrap with key takeaways so you leave confident and calm. To guide you smoothly, here is our roadmap. First, we will explain why 1099 taxes can feel confusing. Next, we will clarify the $400 self-employment rule. After that, we will cover quarterly estimated taxes. Then, we will unpack safe harbor protections. Moving forward, we will provide an immediate fix and the best deductions to consider. Afterwards, we will reinforce your learning with short quizzes. Finally, we will close with key takeaways and your next steps. Before we begin, a quick but important disclaimer. This video is for educational purposes only and is not tax, legal, or financial advice. Since everyone's situation is unique and tax rules can change, you should consult a qualified tax professional or the relevant tax authority for guidance specific to you. With that in place, let's move into the 1099 reality. Now let's set the stage. Earning 1099 income, even part-time, means you are responsible for setting aside taxes, including self-employment taxes. Many people are never taught how this works, which is why confusion is so common. Fortunately, when you understand a few key rules and protections, most issues are manageable and not disastrous. With that in mind, let's clarify the crucial $400 rule. Transitioning into specifics, the first critical threshold is the $400 rule. If your net earnings from self-employment are $400 or more, you must file a return and pay self-employment tax, which covers Social Security and Medicare. This is separate from income tax. The most common mistake is forgetting this threshold and assuming small side income is too minor to matter. For example, if you net $500, you will owe self-employment tax at approximately 15.3% on most of that amount. While the dollar amount may not be large, the requirement is mandatory. Next, let's connect this to quarterly estimated taxes so you understand when to send payments during the year. Moving forward, if you expect to owe $1,000 or more for the year, you generally must make quarterly estimated payments. Typical due dates fall around April 15th, June 15th, September 15th, and the following January 15th. If you skip these, you can face an underpayment penalty. However, for relatively low earnings, the penalty is often modest and will typically be calculated and billed automatically by the tax authority later. Now that we have the schedule in mind, let's compare how W-2 and 1099 income differ so you can coordinate withholding and estimates effectively. To clarify the contrast, W-2 income includes automatic withholding handled by your employer for both income taxes and payroll taxes. In that case, adjustments can be made through a W-4 to increase or decrease the withholding. In contrast, 1099 income requires you to set aside and remit taxes yourself, including self-employment tax on net profit. It also requires diligent tracking of expenses and receipts. For timing, you either make quarterly estimated payments or increase your W-2 withholding to compensate for the additional tax. With this difference in mind, let's move to the protections that can shield you from large penalties. Safe harbor rules. Here is how safe harbor works conceptually. If you do not expect to owe $1,000 or more for the current year, quarterly estimates may not be required. If you do expect to owe at least that much, check whether your W-2 withholding and other payments together will cover roughly 90% of your current year total tax. If yes, you are protected under the 90% rule. If not, check the prior year. If your total payments for the prior year were at least 100% of your prior year total tax, you are usually protected under the prior year rule. For some higher income taxpayers, a higher prior year percentage, sometimes 110%, may apply, so you should verify current rules. If you do not meet any of these, making quarterly estimates is recommended to reduce or avoid penalties. Now let's solidify this with examples and the likely size of penalties at lower income levels. To bring this to life, consider these scenarios. First, if your W-2 withholding and other payments cover roughly 90% of your current year total tax, you generally avoid significant penalties, even if you missed quarterly estimates. Second, if you paid at least 100% of last year's total tax through withholding, that often protects you under the prior year rule. For a lower income scenario, say around $8,500 of gross 1099 income, Any penalty for missing quarterly estimates is typically small and may be automatically calculated and billed later. However, remember that details can change and higher income taxpayers may face different thresholds, sometimes 110% for the prior year benchmark. Therefore, always confirm the latest rules. Next, let's reduce your tax bill with smart deductions. Let's review common deductions that lower taxable profit. Mileage or vehicle expenses for business travel can be deductible if tracked properly, with dates, purpose, and miles. Supplies like software, notebooks, or small tools are deductible with receipts. A home office can be deductible if it is used regularly and exclusively for business. Phone and internet expenses can be allocated based on a reasonable business use percentage. Professional fees for tax preparation, legal advice, or bookkeeping related to your business are typically deductible. Education that maintains or improves skills relevant to your trade can qualify. Finally, advertising and branding costs such as websites, ads, or design can reduce your net profit. With deductions in mind, let's move to the immediate fix if you are behind. To get back on track, start by gathering your records, including any 1099 forms, income logs, and expense receipts. Next, calculate your net profit on Schedule C and verify whether you crossed the $400 threshold for self-employment tax. Then, file any past due returns immediately to stop failure to file penalties from accruing. At the same time, maximize your deductions such as mileage, supplies, and home office costs to lower taxable income. If you expect to owe $1,000 or more for the year, make a catch-up estimated payment now. You can also adjust your W-2 withholding by submitting a new W-4 to help cover future 1099 taxes. Set reminders for quarterly due dates and track expenses monthly so you do not fall behind again. If you are uncertain, consult a qualified tax professional to evaluate safe harbor options. Next, let's visualize the deduction strategy to make it memorable. This mind map organizes common 1099 deductions into clear branches. Mileage includes keeping logs with purpose and dates. Home office requires exclusive use and may use either a regular or simplified method. Supplies include receipts for tools and software. Phone and internet should be allocated by business percentage. Professional fees cover tax preparation and bookkeeping tied to your business. Education applies when it maintains or improves your current skills. Advertising encompasses websites and paid promotions. With a visual map in mind, let's also see the typical flow of information between you and the tax authority. This sequence diagram shows the real-world flow. The freelancer provides services to the client, and the client pays 1099 income. The freelancer records expenses in an expense tracker, and then provides income and deduction details to tax software or a preparer. The software or preparer files the return and calculates self-employment tax, while the freelancer may also send quarterly estimates when needed. The tax authority confirms receipt and, if applicable, assesses any underpayment penalty. With process flow clear, let's test your understanding with a quick quiz. Question 1. If your net self-employment earnings are $420 for the year, what must you do? Option A. Nothing. You are below the threshold. Option B. File a return and pay self-employment tax if applicable. Option C. Only pay income tax, not self-employment tax. Option D. Wait until next year to report it. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is to file a return and pay self-employment tax if applicable. Crossing the $400 net earnings threshold triggers the filing requirement and the self-employment tax. Question 2. You missed your first 2 quarterly estimated payments, but your W-2 withholding will cover approximately 100% of last year's total tax. What is the likely outcome? Option A. A huge penalty is certain. Option B. You are likely protected under the Safe Harbor prior year rule. Option C. You must amend last year's return. Option D. You cannot file this year. You may pause the video now to consider your answer. We will explain in the next section. The correct answer is that you are likely protected under the Safe Harbor prior year rule. Paying at least 100% of the prior year's total tax generally shields you from significant underpayment penalties, though higher income filers should confirm if a higher threshold applies for them. To summarize the essentials. First, a $400 net profit triggers self-employment tax. Second, if you expect to owe $1,000 or more, plan for quarterly estimates or increase W-2 withholding. Third, safe harbor protections often apply if you paid roughly 90% of the current year tax, or 100% of the prior year tax, with possible variations for higher incomes. Fourth, for lower incomes such as around $8,500 gross, penalties for missed estimates are typically modest. Fifth, file any overdue returns now and maximize deductions to reduce what you owe. Finally, track expenses monthly and set calendar reminders for due dates. As we wrap up, remember that 1099 taxes may feel daunting at first, but the core rules are learnable. Safe harbor provisions often soften the impact of missed estimates, especially for first-time or lower-income situations. The most important step is to act now. File any outstanding returns, take every legitimate deduction, and plan ahead with estimates or withholding adjustments. In most cases, a small mistake leads to a small penalty and an important lesson, not a catastrophe. To finish strong, here is a final nudge to stay engaged and help others learn. Thank you for watching. If this video helped, please like it, share it with a friend who freelances, and subscribe for more practical guides. In the comments, tell us your biggest 1099 question or the tip you will use first. Your feedback helps us create even better content next time.